First stock of the day, though, I thought we'd look at JB Hi-Fi. Its results out today. Grew its full-year net profit up close to 8%, just under $545 million. Also bumped revenues up 3.5%. Online sales grew by 50%. They're saying strong sales momentum through the year, particularly in its second half, driven by heightened demand for consumer electronics and appliances. Final dividend $1.53. And they're also pleased with the start of its FY23 fiscal year. July sales growth nearing 10% across JB Hi-Fi and the Good Guys here locally. No guidance apart from that. Shares dipping into the red down, only 1% today. But sort of this is a bit of a bellwether retail stock that comes up a lot here on the call, which is why I wanted to do it as our stock of the day. Retailers being pounded the last couple of months, prospect of a recession. JB Hi-Fi today. Gaurav, what do you think of the results and the share price, and also outlook for retail sector?
Yeah, when the market picks on a sector and goes to town on it the way they have on retail, you got to be really careful. Sometimes, to have a contrarian view on the market, it can be an instinct for many people. It's an instinct for me, but it's one you need to counter, because the market is actually right more often than it's wrong. And when it's telling you something, it's worthwhile listening. I've learned that you just got to pay respect to the market. It's actually made up of millions of individuals, lots of informed opinions, a great deal of collective intelligence, and you disrespect those things at your peril. So I don't think the market's been necessarily crazy to single out retail. You look at what's happening in the economy and in the world, and there's no doubt the power of consumers, it's reducing now, and it's going to tighten even further. We've got huge levels of debt, interest rates are going up. These are no mysteries, everyone knows this, and it's being priced into stocks, entirely appropriate. Where there might be an opportunity is that everyone has jumped on this theme and acted uniformly, and I think there are pockets of opportunity in retail. I'm not convinced JB Hi-Fi is one of them. Right. The market's certainly laid down its verdict. The stock price has fallen, the valuation is extraordinarily cheap in traditional metrics, but you look at what's happened to JB Hi-Fi over the course of the pandemic, the way margins and revenue have just skyrocketed, and you've got to question whether those things are sustainable. I don't believe they are. And then you overlay that with a consumer that's going to be paying more for electricity, energy, and interest payments. It seems difficult to believe that they're going to maintain revenue and margins. I think this is a business going to face declining profits in the next few years. But look, having said that, this is an astonishing retailer. I just noticed that $9 billion of sales, Koshi. I remember doing work on this with the team 6 or 7 years ago, and never did we think this was going to get to a $9 billion business. Right. And I still think there's room for them to grow. When they took over, Mace, what's it called?
Good Guys.
Thank you, Good Guys. We all thought it was a mistake. When DVD sales were falling, we all thought it was imperiled. We have underestimated this business time and time again, and what differentiates it is that it's just a fantastic management with a fantastic culture. Those sort of traits one should not underestimate. Okay. I am still going to go sell.
Sell, right? Okay.
But I think I've been wrong on this stock for a long time. There's a good chance it could be wrong. But I think life's going to get harder for JB. Wonderful retailer, though.
Mathan?
Yeah, hard to disagree as much as I want to. Look, JB Hi-Fi has a great business. We've always said that. Like, these guys jam more crap in your face than anyone, right? Apart from Chemist Warehouse, I don't know anyone else who can put per square meter more stuff. They're good. I still don't buy into the Good Guys was a great play. It's top of the cycle play. Time will tell. Time will tell. I mean, we could be wrong. I mean, I could be wrong. That's, you look at the numbers. I think the housing cycle plays out weak for a few years. I'm not buying into these massive falls, because even in the 90s, if you go back, when you add the cost of debt, and everyone starts their property cycle in 2000 for a reason, because the 90s was down. It took 4 or 5 years, but it wasn't big falls. It was just 5 to 10% for a number of years. So that's the kind of deflation that plays through. And Gaurav's right. I was looking at the energy bill last month, and I went, damn, that's high. And then I went back and looked at it, and I didn't. My wife, she's an accountant, so she went back to the same month last year because, cyclical, like for like. up 50%.
Wow.
Right?
Yep.
50%. And we were locked pretty much inside the house last time, so we spent less time in the house this time, and yet the energy price is that much. So everyone's going to get
anything. I paid $4 for a cucumber on the weekend.
Yeah, it's insane.
Wow.
I know. We needed to make a salad
$4.
costume.
Yeah,
What could I do?
so the thing is, you look at that, you look at all the costs are going up, irrespective of what the spin cycle out of RBA, the reality is that's what you're facing.
Yeah.
So retail, there's a reason why it fell. It fell hard, and it's been bashed, and now it's had a bounce. Now the bounce has given back what I thought was the discount. So I'm not jumping in. I'm not overly negative on retail now because everyone is negative, right? But at the same time, I don't think this is the time to jump in. You have to be very specific on retail. And I don't think JB Hi-Fi or Harvey Norman are ever going to be that cheap because everyone's looking at it. You want to look at specific retailers.
I've got a
in
lot
the
of
market,
problems
right?
with Harvey Norman. We'll talk about that
Yeah,
another day. But that's nothing like this business.
It doesn't get, like for me, these are the big players. So
Yep.
you're not going to be the big mover in this one. It's a cyclical. So you buy this when it looks atrocious. The multiples have to be massive. But it's like resources. You buy it when nobody wants to look at it and the outlook is crap. And that is not the case. So I'm still staying out of this, but I am looking at retail because in the pullback, retail and the media sector got hammered more than the
Media's
banks
also
and the
interesting.
property,
Yep,
which
agree with
doesn't
that.
make sense to me.
Yeah.
So there is a imbalance playing out, but doesn't mean it's positive. So in the shorter term, I'm still looking at it. If they come back to the lows, I would start looking at it again. So I know where the support level for me for retail is. So I'm not jumping in on the bounce, and I think the market also realizes the same thing today.
Over the last couple of weeks on the call, the two retailers that seem to have had the biggest support are Baby Bundy and Lavisa.
I'd throw in Universal is kind
Yeah,
of
oh,
interesting.
Universal
it's coming
still
back.
does.
Lavisa is the best retailer in the country.
Yeah.
Yeah,
Astonishing.
well, they're
yeah.
outside the country. That's the beauty of it. But
That's right.
but
yes.
the trick here is
yeah.
the thing that you got to be careful is City Chic used to be the market, one of the
Yeah,
market
you're
darlings,
right.
right?
Yeah.
Not anymore. So this is how quickly things can change. So you
Yep.
always need to be adaptable,
Okay.
Yep.
and in retail especially, you need to be adaptable.
Retail is not a set and forget
No,
investment,
no.
Unless you're possibly Bunnings or Woolies,
Right.
maybe.
Yeah, but that's stable.
something. Yeah. It is
Okay.
stable, yeah.